You said you've seen the biggest exodus since the LA earthquake in '94. And at the same time, all these first-time and new home buyers who unfortunately now have to pay up for these prices. So maybe we'll start with some of these listings to show people what we're talking about. How about this Granada Hills one listed around 900, sold for 1.2 million? How many offers did you get on this one?
We had 32 offers in the first 9 days. And yes, it bid up several $100,000 over list, which is, it's just unprecedented.
Wow, you have Studio City listing this one, a $3 million one. So again, we're getting into more of the high end of the market. Stephanie, tell us about the slowing lately. Again, we're emphasizing slowing from really high levels, but what's accounting for the cool down?
Sure. So I think what's happening is, you know, as soon as shelter in place hit, everything just went sideways. And the first month, of course, was the radio silent. And then right about mid-May of 2020, it just two things happened primarily. Interest rates dropped to historic lows. Money is, I mean, almost free. You can get loans, you know, high ones, low 2%. And collectively, everybody went from spending 80% of their waking hours outside of the house to 80% of their waking hours inside of the house. So it was all of a sudden hypersensitive to where am I living and what can I do with my own housing situation. So it changed lanes and took off like a rocket. I mean, none of us expected it. Quite frankly, when shelter in place hit last year, I thought after selling real estate for a few decades, I thought, I'm done. Who's going to want to buy and sell a home? Who's going to want me in their house? And it just took off like a rocket. So we're seeing just a tremendous volume.
Roughly what percent of your listings or what percent of California listings are trading at above the asking price? And is that roughly the same as last year, higher or lower?
So that's a really good question. It really depends on where the seller prices their home in relation to the market. So last year we were seeing where you would look at the comps and then you could just kind of pick a number a little bit higher and it would go from there. We are now back to a new normal. It has leveled. And although we are still seeing strong pricing, we're not seeing runaway pricing anymore. We are getting some buyer fatigue. We are getting buyers who will say, you know, I'll pay a good price, but I'm just not going to pay a crazy number like we did see last year.
How about where is all this money coming from? Where's all the cash coming from?
Sure. So last year in California, and this is a California Association of Realtors statistic, 83% of all transactions did get a loan. So only 17% were all cash. And what's happening is, I mean, interest rates are so low, so it's affordable. And in many cases, outside of property taxes, it's actually more affordable to purchase than to rent. So we're seeing, even though there's been a tremendous exodus last year, over 50% of my clients left California. We are seeing a tremendous amount of people who are either moving up or getting into the market. And even for a first-time buyer, which our first-time buyer price levels are over $500,000, $700,000, which is a bit crazy for a first-time buyer.
Starter home.
But compared to rent, it's in many cases cheaper to buy than it is to rent.